the Brent crude prices have extended decline for a fifth straight session as economic slowdown in the US and Europe fears of lower oil demand. For an outlook of the crude prices, we are now joined by Michael Hewson, his market analyst CMC, and he joins us from London. Michael, hi, welcome to the show. The kind of decline that we have seen in crude prices, 6% of a decline in the previous week, and this week actually hasn't started on a positive note. How are you looking at the prices now?
Well, looking at the Brent prices, there is a concern that we could well see further declines. When I'm looking at the daily chart, we broke below the 200-day moving average yesterday and closed below it as well. And that suggests to me that we could well see further declines towards $110 a barrel unless we get back above $114 a barrel in the next couple of days. And really the outlook doesn't look particularly positive. When you look at what's happening in Europe, there's also concerns about a slowdown in China and obviously concerns about, potential slowdown in India as well. So, where's the future demand going to come from? And I think from that perspective, we could well see lower crude prices in the near term.
Michael, how much of a further decline are we talking about from here? Because there are levels like 100, 105 also floating in the market. Do you think the situation, the demand concern is so high in the market that you could see that kind of a decline as well?
I think there's certainly potential for that, yes. I would be looking initially around about $109, $110 a barrel, and that's essentially this year's lows in the Brent prices. That was the low in January, where the market bounced off, and then we saw a move back to around the 128 level. So I would certainly be looking around that sort of area to find some degree of support, $109.50. So there's definite potential for us to go all the way back there, yes.
Michael, as you pointed out, the concerns are many. The U.S. Data hasn't been so positive. The Europe concerns just continue. Asia is not exactly in that high demand period. So looking at all of that, going forward, what are the fundamentals or what are the cues that you would be looking for?
Well, essentially I'll be looking at, further evidence of a slowdown in China. Later this week, we have industrial production data and retail sales data out of China. So I'll be looking to see whether or not there's a softening in that data. We've also got some US data out later this week, which is expected to also suggest that economic conditions remain very, very difficult. The problem that we have with respect to the US economy is the data, while it's not good, it's also not sufficiently bad to prompt further speculation about further QE, which essentially would push oil prices higher. So at the moment, we're in a bit of a midway point whereby the data's okay, but it's not good enough to achieve, lift-off in terms of the US economy, but it's not bad enough to prompt further QE. And I think as a result, people are going to look at more emerging markets and where the demand is going to come from there than they are at the US economy. And I think that's going to weigh down on crude prices over the next few weeks.
That's about the near term, Michael, but how do you see at a slightly longer term? How do you see the crude prices now ranging for the rest of the 2012? Would you say that maybe we have done the highest level for 2012?
I think we have. I think we're in a broad range, and I think the bottom of the range is around about 105, and the top of the range is about 125. And I think we'll continue to oscillate between those particular barriers. I think you could see a pickup in growth at the end of Q2 and the beginning of Q3. It really depends on how the events play out in Europe and whether there's a massive disruption caused by events in Greece over the next couple of weeks or so.
All right, Michael, we'll let you go at that. Thank you so much for joining us. So that's the view coming in from CMC. Really, they expect the crude prices for the very near term to trade within that 110 to 114 for Brent, but they clearly are not ruling out further decline in those prices.